In this video, I want to show you how you can get sniper entries that can give you profits in the forex market. The SMC, smart money entry confirmation strategy, and entry that can give you great profits in the market. All right, so now the importance of smart money entry strategy is that number one, it will give you good risk to reward ratio to trades. You can have like 1:3 and above, 1:3 risk to reward ratio and above, when taking trades. Even at some point, even you can as well have 1:6 or even higher risk to reward ratio. Number two is that it will give you high probability of success when trading the forex market. Okay, so these are the two reasons why you need to learn the smart money entry strategy. You need to understand that entries are very, very important because once you enter the right way, you will reduce losses and it will increase your win rate and you become profitable in the long run. That is why I want to show you ways you can enter trades. Now, three strategies I want to show you right now, which you can use when you want to take trades. Okay, the first one is this: when you have the market like a supply zone here, you have the market creating giving us our liquidity equal highs, and now the market start making higher highs and higher lows into your zone. So once the market comes into your zone, this could be like a 30 minutes time frame or 15 minutes time frame. Okay, so if the market comes into your zone, you are now stepping down to a lower time frame like 5 minutes time frame or 1 minute time frame. When you step down into any of these lower time frame, okay, you now wait for you watch. This is the market is creating higher highs and higher lows. So once the market comes into your zone, you are waiting for the market to break structure to the downside, take out this low, and when this happens, you have what we call the change of character. Okay, you have what we call the change of character. So you want now the market to now come back to return to your order block before you can get your entry. So there's this is the supply zone that gave us this change of character. So you want the market to return to this supply zone or to this FVG. This is a supply zone or FVG here, any of them. So you want the market to return to your supply zone, the mini supply zone or FVG, and then that forms your entry. Okay, that forms your entry into the zone. All right, that forms your entry, which you now sell down to this final take profit. You could take like your partial take profit midway, and you now hold the market down to the final take profit. So this is one way you can enter the trade. This is one way. This is one entry. Okay, so I want to show you another one. This is the first one. I want to show you another one. Don't worry, I'm going to go to the chart to show you all these strategies subsequently. Now on the flip side, this also applies to the demand zone on the flip side, because for a demand zone you have like this. Okay, the market would come and give you some equal lows and now come into your zone. Okay, so once the market comes into your zone on a higher time frame, you now step down to lower time frame. You want the market to take out this high and return to the demand zone, mini demand zone that gave us a break of structure to the upside, or they gave us the change of character. Okay, so you want the market to take that out, and that will now form your entry, which should ride up. Okay, which you are going to ride up, okay, to the final tick P limit. Okay, so this is for the first strategy. I've showed you both the supply and the demand, and we're going to be showing you the chart in no distant time. All right, so now the second one is this, which has a higher probability of success. The first one just contains just one change of character and at your zone, okay, at your supply or your demand zone. While the second entry strategy is this: you have the market come into your zone. So the market have come into your zone, you step down to lower time frame, but you are not just, you have this break of structure to the downside, and you have to return to the order block or FVG. So as the market returns, you are not entering on this first one. This is your first entry confirmation. So this one, the first strategy I've showed you is you just need one entry confirmation. That's the first strategy. But the second one now I'm showing you right now, you need double entry confirmation. That is to say, you have seen your first change of character. Now you want the market to break this structure again. All right, once the market breaks this structure, now before you now enter on the second one. All right, you enter on the second one here. For the first one, this is going to be your stop loss distance, not the unrefined zone. But this second one, your stop loss distance would be here. So this is, the market has broken the first structure. You want the market to break another structure before you can now get your entry. So, and you now ride the market down to the final take profit. You can as well take your your partials around midway. Okay, now let me show you for the demand zone. For the demand zone, you have like this. Okay, you want the market to come down to your zone. Okay, the market have come down into your zone. You step down to lower time frame. There's a break of structure to the upside. This is your first entry confirmation. But no, you are not getting in. You are not getting into the trade here. But you want the market to break this one as well, to break up. So the market have broken this one. So your entry will now be here, and your stop loss will be here. Ideally, your stop loss is supposed to be here if you were to use the first strategy. But for the second strategy, which is a double confirmation method, okay, the first one is a one single confirmation method, and this second one strategy I'm showing you is a double confirmation method. So you have now got first entry confirmation. No, you don't enter. You're waiting for the market to break a second structure, okay, to the upside, and this forms your entry, which you're going to ride up to the final point. You could take your partials around here. This is your stop loss, not this. Okay, for the first strategy you are taking, this your stop loss is going to be here, but here you're going to have your stop loss here. Each of them have the advantage and disadvantage. Okay, each of these two strategies have the advantage and disadvantage. I'm going to tell you the advantage and disadvantage, and I'm going to show you on the chart how this work. Okay, now the advantage of the first one is that you have more trades to take. Sometimes the market may not give you this opportunity of a second take profit. The market may not give you sometimes. So the market sometimes will just break structure here and now ride up. We're going to see it later. I'll be showing you later. Okay, sometimes the market will just break this structure and just zoom up. Okay, and may not give you the second break of structure. So that is the disadvantage sometimes. But the advantage of the second strategy is that it gives you higher confirmation. It gives you a second confirmation. If you pass through the second one, okay, the double confirmation method, you will hardly lose a trade because it is a double confirmation. All right, although you might miss some trades sometimes, since this second confirmation may not be applicable all the time. The third one now you may want to take, this is for those of you that are familiar with retail strategy. This is another way you can have your entry confirmation. You have the market come up to your zone. Okay, so you want to see the market create some sort of head and shoulders, okay, like this. Now the market, this is the left shoulder, this is the head, and this is the right shoulder. If you have an eye, you see that the market will create head and shoulders here. So when the head and shoulders are created in the zone on your lower time frame, all you just need to do is for the market to come up, okay, retest this point, and you can now get in, put your stop loss right there, okay, or here, any place, either here or here at the top, at the right shoulder, and you now ride the market down to this point. So this is the head and shoulders entry confirmation strategy. Again, you may not see it in all the cases. Okay, the one that you see mostly in the cases is strategy number one, whereby you just get a single entry confirmation method. Strategy number two, high win rate, but may not be seen all the time in the market. Strategy number three is also is also a good one, but the only difference is that your risk to reward ratio may not be as high as strategy number one. So now on the flip side for this one, you have like this. Okay, for the demand version of it. So the market have taken the liquidity. It will now go into the zone. Okay, so you have your left shoulder. The market would give you this, the head, go up, break structure, okay, give you the right shoulder, come down, retest this, and the market will ride up. So this is your inverse head and shoulder. Your stop loss will be here or here. Your take profit, your inner take profit will be there. So this is your inverse head and shoulder pattern of entry confirmation. So I've showed you 3 entry confirmations to trading smart money concepts, 3 entry confirmations that work so well, and each of them have the advantage and disadvantage, and each of them have their merit and demerit. So, and I've explained them to you. So let us see on the chart. Now I've marked some zones. These are supply zones. I'm going to also be showing you demand zone. These are some supply zones. Okay, this is 1, this is 2, this is 3. There's another one as well I want to show you. It's somewhere around there. Okay, let me see. Okay, this is another one as well. So let us just go on a lower time frame. We are currently on 15 minutes time frame. Let us go on 1 minute time frame so we can see how we could have entered these trades. Okay, let's go on 1 minute time frame so we can see how we could have entered the trade. So if we go on 1 minute time frame, so this is it. This is this one. This is the first zone. For the first zone, you can see that the market came into the zone. All right, the market was making higher highs and higher lows all here. The market just tapped into the zone here. It's not actually, you can't take this as an entry. We want the market to come fully into the zone. All right, here the market came into the zone, but it was still making higher highs. Okay, so where the market now broke structure was somewhere around here. So this market making higher highs. So but the market broke structure here, okay, and stopped making higher highs. Okay, so as it broke structure here, the market returned here to the other block right there. That caused the break of structure, and this forms our entry into the trade. This forms our entry. This is market broke structure. This forms our entry into the trade. So when the market, so there's also another zone here, which is a rally base drop zone. This zone here was retested. This market came to this zone. Okay, so this is the first entry. This is the first entry. So this could be your second entry. Okay, for those of you that are looking for the double entry confirmation method, so this is the second entry. All right, so from here you could now ride the market down to the end of, this is your final TP. Your final TP will be from where the market reversed, okay, into the zone. So that is your final TP. You could take your midway TP, which is a partial take profit right there. If you want me to train you, take you by the hand to teach you these things one-on-one, help you to understand these concepts, even if you have spent years trading the forex market with no result, I can help you. All you just need to do is to contact me. My contact detail is in my forex telegram community, and the link to my forex telegram community is in the description box of this video. Do not fail to contact me. I will help you to correct your deficiencies, take you by the hand, and help you to become a profitable forex trader. Now, this is another one here. So you can see in this case, the market there are two entry method you could have used here. Number one, you can see this is left shoulder, head, right shoulder. Okay, so once you've had that, the market now returned to this place, retested here. This could be your entry, and you take the market down. That is one way you can enter this trade. Another way you can enter this trade, the market was making higher highs and higher lows. So at this point, the market broke structure here. The market gave us our change of character right there. Okay, as it gave us a change of character, the market returned to the other block that gave us a change of character. This is going to be our stop loss right there. And so you ride the market, you enter here. Okay, you enter there, the market. Another way, this is the three strategies are shown on this particular scenario. You have seen the head and shoulders entry method. Now you have also seen the single entry, single confirmation, which is this is your single confirmation entry. Now your double confirmation entry will be, this is your first entry confirmation. Now second one here. Okay, now you see the market now, this could be your second entry. Double, the market broke structure number one, structure number two, stop loss here, entry here. Okay, you ride the market down. So this is number one, number two, and now you ride the market down to your final take profit. So these are the three strategies are exemplified in this example. Let us see the third one. So in this third one, only the first, okay, the number 1 and 3 are exemplified here, because you can see your left shoulder, your head, and your right shoulder here. So this is like the market now came, although there was no retest, but the market now dropped down so fast. Final TP. The market dropped down so fast, so fast. Now, number one entry confirmation method is also here. Okay, the market was making higher highs and higher lows up right there. So it went so high and now broke structure here. As it broke structure here, giving us this our change of character. And now this is our return to the order block here. Return to the order block. And then this is going to be our stop loss right there, our entry. Write it down to the final take profit. So only entry number 2 was not exemplified in this case, because if we were to have entry number 2, this is our first break. This is our first break of structure right there. So this is our first break of structure here. So return to the other block. Entry number 2 would have been for the market to give us another point here, whereby you could have rolled the market down, but that did not happen. The market just impulsed down. Market impulsed down without giving us a second entry confirmation. So you can see that you need to know these 3 cases so that you know what to do at every given point in time. So let us see another one. Let's see another one we marked. Let us see if we could see. Let's see another one we mark somewhere there. So here you can see in this case, this is another zone that we marked. So in this zone as well, the market here came, broke this structure. Okay, you can see the market broke this structure. So this is our number 1, entry number 1, entry confirmation number 1. Okay, the entry confirmation number 1 here. So this is going to be like our return to the order block. Okay, here stop loss right there. So you could enter the market and write it down. Okay, so for entry number 2, I think we also have entry number 2. The market broke this structure. This is our first case. So the market broke second structure here. So entry number 2 will be somewhere around there. Stop loss here. For entry number 1, your stop loss will be somewhere up here. But this one, entry number 2, your stop loss is right there. And your entry will be here. And you ride the market down to the final take profit. We also have entry number 3 in this case. Let's see where we have our head and shoulders. Do we have our head and shoulders? Let's see. Okay, yeah, we have like this is a left shoulder, this is the head, this is the right shoulder. So and the market now gave us a return here. This is the neckline. So the market returned, and this is going to be our entry. So the entry number 3 and entry number 2 have this, in this case, have the same entry point. So this is let's go back to 15 minutes time frame. So for this, we are back to 15 minutes time frame. So these are the ones we just considered. So now let us still go to another market instrument. This is GBP USD. Let us go to maybe another one. Let's see USD JPY. So we're on USD JPY. Please, if you're here to subscribe to this YouTube channel, please do not fail to do so. Okay, give this video a thumbs up. Comment down below to let me know if you found this video useful. And if you're here to join our free Telegram community, do not fail to join our free Telegram community. The link is in the description box of this video. If you want me to take you by the hand, help you to become a profitable trader, do not fail to contact me. I will train you. I've trained a whole lot of people, and they are becoming great and useful and profitable in the market. All right, my contact details is in the description box of this video when you enter our free Telegram community. Now you see this case here also, just to show you on another market pair. This is USD JPY. This is key. If you want to become successful in forex trading, you need to know your entries. Very, very important. This is key. So this case, let us step down to lower time frame, 1 minute time frame. So if we step down to 1 minute time frame, let's see. Okay, so here in this case, in 1 minute time frame, this zone, the market broke structure here. The market, all these places, the market have not really entered the zone here. Okay, it was in this case that the market entered into the zone. So we don't just work with the tap. We want to see the market go deeper into the zone. It is safer if the market goes deeper into the zone. Okay, so the market went, in this case, the market went deep here into the zone. So here, this is where the market came into the zone. So we want the market to break this structure. So the market broke this structure here by this move. So as it broke this structure, the market now returned here to the FVG. In this case, it was the FVG that was returned to, not the other block, because this is the other block. So the market decided to return to the FVG, and now before it bought. So it was only the first scenario that the first case that was used in this case, first entry way. So let us see another one. So this is another example. So this is another example here. So in this example here, you see that the market came into the zone, and is there a break of structure? This is a structure here. This what was not broken by this, so but this is a break of structure here. So the market broke this structure, all right, here, and returned to this FVG, return to this FVG, which formed the entry. Okay, the market just returned to the FVG here. This was a break of structure, FVG. So this is our entry, stop loss here, and right down to the final take profit. So let us see if we have another example. Let us see if we have another example, just to help us to understand these concepts clearly. You're on USD JPY. So this is another one on USD JPY. Okay, so in this case, you can see here that the market came into the zone right there and broke structure here. Okay, as it broke structure, this is our return to that block. So this is entry number one, entry confirmation number one. Okay, so this is our entry, stop loss right there. So you ride the market up, but then you can as well have entry number two, because the market broke structure again, giving us, but the market did not return to the other block, it returned to the FVG here. Also, it's a stop loss, so the market returned to the FVG, with which it now rolled up. So this is entry confirmation number two. Okay, let us see if we have entry confirmation number three, which is our inverse head and shoulders. Do we have an inverse head and shoulders here? So let us see. Yeah, I think since we do, this serves like the left shoulder, this is the head, and this is the right shoulder. So this is like an inverse head and shoulders, and the market broke structure, return here, pull back here, entry, and you ride up the market. So this is another good example to exemplify these entry confirmation strategies. Let's see if we still have more. So there is no another one, but let us look at another pair. Let's see another pair. Let us see Australian dollar. So in Australian dollar, well, we have to go to 15 minutes in order to see it clearly. Okay, good. So I've marked this zone. So on 15 minutes time frame on this zone, you can see this zone. This is a demand zone. So this is a demand zone. So the market came to this zone, and there's an entry confirmation here on the lower time frame. So let us go to lower time frame so we can see how we could have entered this zone, this trade, if we are trading it. So we look, this is 1 minute time frame. Let us look for the zone on 1 minute time frame. Let's look for the, so this is the zone. That is the zone on 1 minute time frame. So you can see that here the market have not come into the market, tapped into the zone, did not really come in. It was in this case that the market really came into the zone here. So you can see the market broke structure here and now return to the zone that give us a break of structure or change of character. So this is going to be our entry or stop loss, and you ride the market right up. So entry confirmations number two, let us see if we have an entry confirmation number two here. So this is entry confirmation number one. Now this structure was also broken here. So but did the market return? Not really. The market did not actually return as much. So this could be entry confirmation number two, but then it is not very clear. But the market did return in its own way, but not as clear as other ones. So let us see if we have entry confirmation number three, which is going to be like an inverse head and shoulder. Do we really have an inverse head and shoulders here? So this is like left shoulder, the head, and the right shoulder, or you can say left shoulder, the head, right shoulder. Okay, break of the neckline. This is neckline, and this is going to be the entry in this case, stop loss here, right? The market up. So this is another case of that shows that it simplifies the three entry confirmation strategies. Number one is the single entry confirmation strategy that has to do single change of character. The second one is the double change of character, which is how we have a second change of character after the first. And the last entry confirmation strategy is the head and shoulders in a supply zone, or the inverse head and shoulders in a demand zone on lower time frame. Please remember that all these entry confirmation strategies will be used on a lower time frame. If your higher time frame is 15 minutes or 30 minutes time frame, then you have to step down to like 5 minutes or 1 minute time frame in order to get the appropriate entry confirmation strategy that you can use at any given point in time. As I've told you, the advantage of this entry confirmation strategy is that it gives you higher risk to reward ratio. Okay, higher risk to reward ratio. Your risk to reward ratio will increase, and number two, it will give you higher win rate. These two things are why you need to have these entry confirmation strategies. Okay, so if you're yet to subscribe to this YouTube channel, please kindly do so. Give this video a thumbs up if you find value from it. Comment down below to let me know what other aspect of trading you want me to educate you on. As well, if you want to join our free Telegram community, the link is in the description box of this video. All right, in that free Telegram community, I share free setups and analysis that you can use to trade at your own discretion. You want me to train you, take you by the hand to become a profitable trader? Even if you have spent years trading the forex market, do not fail to contact me. My contact detail is in our free Telegram community, and the link to our free Telegram community is in the description box of this video. So till I come your way next time with another useful content and educational video, do have a wonderful day ahead. Bye.